I'll be honest with you, this market is exhausting. Yesterday looked like it wanted to cooperate. We had a clean pullback to the 674 area on SPY with a hammer close on Tuesday. The structure was there and a bounce made sense. Then yesterday, instead of follow through, price rolled back over and closed at low of day. And when I woke up this morning and saw that close, I'm in Thailand, so I don't typically get to see the afternoon sessions, but I woke up and saw that daily candle on SPY and kind of rolled my eyes, but I was quickly put to ease, knowing my model saved me again. I've mentioned it many times here on the channel in the market analysis, and we talked about it live in chat last night and all agreed we need the market to remount the 9. It did not. I know it can be frustrating, but this is the edge that can change your life. It protects your capital when we're in this sort of chop, and it grows it when we're in a follow-through environment. The triple R model at its core, paired with the ability to read market breadth and structure, is a resumption of trend system, which we did not get. So no confirmation, no trade. There was no remount, no confirmation, no trade. And this is what a lot of traders miss and struggle with. You cannot predict or anticipate. You need to build if this then that scenarios based off of, again, market breadth and structure. And if the market confirms, we act. And if it does not, we do nothing. We must continue to wait. Cash is a position. Protecting capital is as important, or I would say more important, than the ability to compound it. And this clarity is what keeps you sane when the markets are indecisive like this. It's what separates the traders who survive from those who, bleed out slowly and blame manipulation. Just because the market is manipulated, sure, I agree it is. It doesn't mean that you have to be. I control my risk, not the markets. Me. I do. And if you're struggling in these markets the last couple of months, getting chopped up, I encourage you to come. I'm going to do a live session on Saturday where I break down the triple R model in a condensed fashion, but I'll show you exactly what it is, why it matters, and why it works. And then we're going to take a look at market breadth. I'll show you exactly how I analyze the markets and build a plan for the week ahead. We'll set our levels together. We'll take a look through the sectors, identify strength, or it may be weakness. Sorry, forgive my Maybom. She's doing laundry. I don't have the heart to tell her. Please stop, I'm recording. Anyways, look, guys, I do encourage you, join me live Saturday. Email me at warrensnacks@gmail.com, and I'll shoot you the Zoom link. We're going to go live New York time, 8:30 Saturday morning. I'll show you exactly what matters to me and what I look for when building a plan, and then we'll do an AMA where you can ask me absolutely anything. Okay, I'll address anything you'd like to talk about after we build our scenarios for the week. But with all that said, we've got CPI pre-market today. And if it comes in hot, I expect more downside. It could even be sharp. But if we're in line or even beat expectations, then we could solidify this higher low and possibly resume trend. But we've got a new level that matters to me. Should we get upside price action? And, really it's the remount. It's the third R in the triple R, but it's a remount of the 9 EMA. And also pairing that here with Tuesday's high. So the level that matters for me to remount and suggest a resumption of trend is a 680 on the SPY. So I need price action to get above that to initiate any additional long-sided risk. And that's why I've got this gray zone here with the NTLZ, no trade long zone, okay? I will not be initiating any new risk to the long side within this zone. I need to invalidate what happened yesterday, get us back onto trend above the short-term moving average, the 9 EMA. And at that point, we can evaluate. We can see, do we have broad multi-sector buyer? Do we have full market participation? Things guys in Bootcamp will articulate live if that is what feels like happens. We'll see how the CPI report comes in later on. And if we get a rip out of that, then I do think this will probably invalidate some of the prints that I was able to see through, like cheddar flow and unusual whales. There's some dip buying happening. And, real quick here, I would say that looking at internals, the sell pressure, although, the daily doesn't look good and the high beta names took a hit again, of course, but, sell side wasn't overly concerning to me here. Okay, so I'm not ready to throw in the towel to the bull thesis just yet. And the additional pathing that we can look at here, the reason I have no trade long zone is if we do continue to get downside and we push up and make a lower high, just completely reversing the trend again, I would consider initiating some shorts back through the 50 should that happen. If we do fail below the 9 again, I would consider that. So this is a no trade long zone, but it doesn't mean that I wouldn't consider a short back through the 50. If the market pops up a little bit, fails and rolls, I think there's some room for a short down to the 663 level, which then becomes very important, okay? Because we still have this inverse head and shoulders. Of course, we did sort of favor or want to see it bounce off the 674 area, which I say area, it still could, okay? If we reverse today, that would be the right shoulder bouncing off of that area. But if we do still continue down, getting a bounce off the 663 area would still validate this head and shoulders, inverted head and shoulders pattern, okay? And we could consider, I don't think I would put on any risk in that until we got back above our moving average. As a matter of fact, I would not. Okay. But, I would just say I'm not going to get overly bearish. I would consider short-term bear exposure in a move like that, but I'm not going to be overly bearish in the market and start calling for a double top. Okay, until we have one. It's not a double top until we have one, until we make new lows. So the real bear thesis, should that price action come, would look like this to me. Break low, pull back, retest, fail it. This is where I would consider shorting the market heavily. Okay, without that, guys, I'm still leaning bullish. Okay, we still have the Fed cutting rates. We still have QE beginning. The printer has been turned on. We still have the IWM small caps breaking out of multi-year range. We still have the RSP leading the SPY. The RSP has broken out and is just pulling back to retest that level. Let's look at it on the RSP. I'm not sure why we're overlaying the SPY. But look, guys, this is healthy price action, okay? It really is. And I know that it's tough when you're in these high beta names, okay, whether you're doing options or you're doing shares, whatever, it's tough to get chopped up. But frankly, this is a zone that has a lack of clarity, a lack of follow through, okay? We are not in a trend. We have not established a trend, okay, to the upside here. So, if you're over positioning into this, I encourage you to wait, learn market structure, and realize that you're not trading with edge. You're trading chop. And unless you're a scalper, right, positioning into these things, whether it be swing trading or even investing at this time, you're not putting probabilities in your favor. It's just that simple. Again, nothing overly concerning in market internals. Let's take a look here at the stocks over the 50 and 200-day moving average. Still nothing overly concerning. Of course, we're getting a pullback here and the stocks making new highs versus lows. Obviously, you can see that in the SPY, but we're still above the zero line and we're still above the midpoint here. The weekly isn't looking great, but we're still above our anchored VWAP stack. Guys, I'm not overly concerned. Okay, this is still within the realm of predictable price action because we're just pulling back off of the ripper from the Thanksgiving holiday. We ripped up, went sideways, now we're pulling back. So guys, we're getting our retracement. We're looking for the reaction. I thought we had our reaction on Tuesday, but we did not get the remount, so we did not do anything. We did not add risk. I need all three. I need a retracement. Well, I need a trend. Okay, well, trends come from this. They come from the triple R. At its core, that's what it is. Sure, it helps when we are in a known identified trend. Okay, but when we're waiting for a new one to establish, it happens via triple R. Retracement, reaction, remount. The reaction is at structure or the moving averages, but what it does is solidify the trend by making a higher low. And then the remount is remounting the short-term moving average, resumption of trend. That is your trigger to do something, okay? Without all three, I would argue you're working against the market, okay? The trend is your friend. We need to wait for it to happen, identify it, and allow it to confirm, to remount, to resume trend. Okay, guys? The names I'm looking at here today, RKLB. First of all, I'm looking at the CPI, reaction to the CPI report, okay? If we get over 680 in the SPY, I'm still slightly favoring the bull side of price action. So if we get that scenario back over 680 on the SPY, I like Rocket Lab through this 2-day high range, okay? The 657, call it 57 area with a hot market, with broad buying, full market participation. The market internals are supporting a entry decision. Okay, so I like Rocket Lab through that 2-day range. I like ISRG a lot long term as well. But this, I think, is tradable where it is currently. Same thing, through this 3-day high range. It's a triple R trying to get through top of range. Call it 562. 562 on ISRG with the market above 680, okay? And RSP popping off, IWM popping off. Look at sectors. This is medical devices, but you can look at the healthcare. Medical devices ETF is, I believe it's IHI, Yeah, medical devices ETF, IHI, right here. This guy's clearing range, okay, and we're getting some heat on this on the 5-minute, and ISRG is clearing range alongside it, and the market's above 680. I really like ISRG. TNA is one that I'm looking at. If we get all the things, I'll stop repeating myself, guys, but if the market catches some heat off of that report this morning, I like TNA, but I'm trading the IWM chart, so we'll look at that first. IWM is small caps ETF. TNA is the 3x leveraged ETF of small caps. So small caps can get above this yellow line. Call it 252. If that happens on a hot market, okay, then I am very likely to take TNA. I was looking at TNA yesterday as the market looked decent at the open, but we were not remounting the 9, and we were talking about it in chat. Can't do anything right now. And then everything started to roll over. I said, all right, guys, I'm going to bed. This isn't it. This is not what broad buying, broad positioning, the heat looks like. So, we stayed away. I woke up this morning and realized there it is again. Protect your capital, okay? Wait for triggers. Know what a trigger is. Come see me on Saturday, guys. Anyways, TNA looks good to me if the market's hot. MU is interesting because they had a fantastic report. There's so much fear in the AI space right now. They do memory. Big narrative coming, in my opinion, for the for AI and data centers, all of the things. They need RAM, they need memory. They had a fantastic report. I think they're opening just above the 9 here. So this is a retracement, reaction, and a remount. So what do I do on gap days like that? I let it gap up. Okay, and if it sells off, I'll go red to green for my entry. If all of the market indicators that I'm looking for are firing as well, but I'll take it on a red to green on the day's open price. Alternatively, if it gaps and goes, if it rips out of the gate on a gap up, you just have to wait for a pullback. See that all of the market indicators are firing. Wait for a pullback, and I don't like that to invalidate the whole move. So if it gaps up and rips, I don't want the pullback to invalidate that whole move, but let it pull back a little bit, hold structure, and you can take it back up towards high of day, okay? So it's a retracement, reaction, and a remount. I don't do that on the 5-minute, but I want to see strength. I want to see follow through. So if we gap and go, let it pull back. It's not going to run away forever. It will pull back. Wait to see the strength on that pullback and wait to see the depth of it, okay? Wait for confirmation. So that's how that goes. All right, if we gap up, we sell off, and I like what I'm seeing in the market, I could red to green, something like MU today, or if it gaps and goes, wait for the pullback that confirms the move, holds, and starts to move back up towards high of day, and you can consider taking it there, okay? And then I like SNDK because I think this will be a sympathy, and it's got a great look and structure to the chart. I like it through yesterday's high. It tried to go yesterday on a triple R, so you get a retracement, reaction, remount. Tried to go yesterday, the market rolled, but I think this could catch sympathy. They do, in a simple world, the same thing as MU. It's not, but they do RAM, they do memory, and they're seeing an uptick in orders due to the AI data centers. So anyways, this is a sympathy to the MU play, and I like it through yesterday's high if the market is looking hot. And then Reddit as well. Reddit tried to go yesterday. We had this on watch yesterday. It tried to go, one that I was looking at, but the market kept us from getting hurt. All right, this is why you don't look at stuff without, when you have a general thesis, when we are not in a follow-through environment in the market, right? When we know we are not in a trend, let alone one that is following through and has legs to it, then you cannot get chasey on your individual names, okay, when they pop up. Because look what happened here. This triggered, but we did not get our market confirmation. We did not have the market at our backs to trust this move, and look what ended up happening, okay? So it's so important, guys, to build the plan, understand breadth, know the plan, and stick to it. Know that we need the trigger in the market. We need the market at our backs. We need Wall Street positioned at our backs and push all of the leaders along with the market, okay? We don't just try to name pick. That is very difficult. Wait for full broad positioning and put the market at your backs, okay? Guys, it's just, I know it's frustrating. This market has been quite annoying, but it could continue. It could go on for months. And what are you going to do during that time? Are you going to keep getting chopped up? Or are you going to wait and protect your capital so you have something to do when we do, and we will finally break out of this sideways multi-month chop that we're in? We will break out of it, and we will very likely go into a sustained trend at that point. Will it be an uptrend, downtrend? It's yet to be seen, okay? But when we break out of this nonsense, we will go into a multi-month trend. I can almost guarantee it, okay? And you need to have some capital to deploy when we finally get that. And when we do get that, we will print money with our trend continuation setups. Okay, I have 5 of them plus a narrative trade, guys. If you're struggling in these markets, first of all, come to Saturday, guys. All right, come in there and take a look at what the triple R is and how I take a look under the hood of the market and build a plan for the week ahead. Start there. Come hang out on Saturday and ask me anything you would like. But if you would rather just jump in, I do offer a 60-day mentorship where it's me and you one-on-one for 60 days. I teach you all 6 of my models, proper risk management, market breadth, and when to apply the edge that I teach you through my 6 models. It's a fantastic opportunity. Again, you work with me directly one-on-one and you get lifetime access to my community. So do consider that. But in the meantime, guys, we're going to watch the CPI report. We're going to see how the market reacts. And if we get a trigger over 680, then we may apply some risk. Stay safe, manage your risks. Let's go make some money. I'll see you soon.